A mitigation block is almost the same thing except the high isn't taken out. So if the price had swept this liquidity and then dropped, it would have been a breaker, right? But then that doesn't happen, meaning the high isn't taken out, or the low in the opposite case. Then it's a mitigation block. The price will inevitably return to it to mitigate the move. This is the inverse of a bullish mitigation example. Here, we didn't take out the last structural low. The price lacked the strength to fully sweep that liquidity, so instead it reversed upward. Now let's move to the chart and examine this in detail. Let's look for a breaker on the chart. Here we have a downward shift, meaning this is the last high that formed the last low. Liquidity for selling was taken here, meaning we absorbed all the available liquidity. There is no old liquidity left in this area. We'll find another example later with old liquidity, but here we have a downward shift. There was also an imbalance, which price filled once again, along with mitigation, specifically a 5-minute one. But the key takeaway is that price took out liquidity, both from the last structural low and also external liquidity from this entire range. It then entered the bullish array, let's say, and this is the mitigation, because we didn't make a new high here. Price then moved up and eventually it reached this mitigation block. Here it is. Now the market is shifting upward. The last high that formed the last low, we're breaking through it, and this final candle will be the breaker. Essentially, all these candles can be considered a breaker because they're all bullish. There isn't a single bearish one. This clearly shows it's one continuous move. If you look at the higher time frame, say the 15-minute chart, these 3 candles would appear as just one. So you can mark the entire move as a breaker. But even the last single candle alone is also a breaker. That's the key point. Now price immediately retests it, finds support at this level, and then impulsively surges away from it, very fast. So to recap briefly in case you got lost, we had a mitigation here, meaning price dropped, took out this liquidity, which was sell-side liquidity, then it rose, started to decline again, but failed to break this structural low. Since it couldn't break lower, it reversed upward, took out the last high, but not the kind of shift we're used to, where we expect a new low to confirm the shift. That's not mandatory. This still counts as a shift, and this whole downward move here, that's the mitigation block. The price surged upward, then moved back down relatively smoothly. Here we took out the last low, clearing out the remaining liquidity right at this level. It tapped into the mitigation block with pinpoint accuracy, tick for tick, absolutely perfect. From there, it broke the previous high, confirming the shift. And the final candle here acts as a breaker block. Price retested it, found support, and then took off again. Staying psychologically stable and calm is crucial. Trading with a cool head and avoiding reckless moves is key. Let's look at this example. Here is the 1-minute chart. Price swept the buy-side liquidity and then hit the order block from the 15-minute time frame. Next, we have the shift, everything we've just analyzed. This is where the shift occurs because this is the last low that formed the last high. Here we have the breaker, the order block and the imbalance, all in one spot. How do we trade this? There are different approaches and I'm sure you'll find your own, but for this example you could enter from the lower boundary of the imbalance, placing your stop below the second candle or even the first. Aim for a 1 to 2 risk reward at minimum. Here, that would have played out perfectly and price delivered. Another option would have been to place the stop just beyond the breaker, a riskier approach but still a valid one. In this case, the move would have been much faster, almost 1 to 5 here, potentially even more profit. But of course, the stop loss is tighter and more aggressive. Alternatively, you could also enter from the order block present here, setting the stop below either the first or the last candle, which in this case aligns with the imbalance as well. Since you stuck around until the end, I've got a special bonus for you. 3 trading strategies I've relied on for years, all with a proven edge. Chances are you've never come across these before, so I highly recommend testing them out, at least on a demo account. You will find the PDF with detailed instructions linked in the description below. Oh, and don't forget to hit that subscribe button and drop a like on this video if you found it helpful. Thanks for watching and I'll see you in the next one.